IRS 1099B revision, precious metals reporting alert. On January 30, 2026, the tax authority quietly revised the instructions for Form 1099B, removing the example under sales of precious metals. That edit is posted on the official website and is verifiable. Removing clarifying examples often broadens interpretive flexibility, which matters because physical precious metal investment is surging at the same time. Context and timing: physical silver demand is rising sharply. Industry forecasts project double-digit growth in 2026, while prices and premiums in major markets have moved materially higher. At the same time, federal and state budgets face pressure. That combination increases the incentive for stricter reporting and enforcement of transactions in hard assets. What changed and why it matters? The instruction text removed an example regarding precious metal sales. Examples typically narrow application. Deleting them can expand an agency's discretion in how it interprets and enforces the rule. Core statutory reporting triggers have not formally changed, but the newly broader instructional language creates more ambiguity for dealers and sellers. Ambiguity in guidance tends to favor broader enforcement. Existing reporting thresholds and rules to remember. Dealer reporting: dealers must file Form 1099B for certain large metal sales. For silver, the commonly cited dealer trigger is sales of 5,000 ounces, 51,000 ounce bars of 0.999 fine silver. Cash reporting: cash purchases above $10,000 generally require Form 8300 reporting to tax and financial crime authorities. With higher silver prices, that dollar threshold covers much smaller physical quantities than in prior years. Tax treatment: precious metals treated as collectibles remain subject to a higher maximum long-term gain rate, historically up to 28%, not the lower capital gains rates that apply to many securities. State-level changes, for example, repeal of certain exemptions, can add additional cost or reporting burdens. Practical consequences and risks. Dealers facing greater interpretive leeway may tighten compliance, expand reporting, or alter acceptance policies, limits on cash sales, additional ID requirements, or transaction refusals. Buyers and sellers who assumed narrow application, for example, reliance on coin exemptions or small, incremental transactions, now face greater uncertainty. What was previously a clear example distinguishing exempt items could be subject to different interpretations. Large or frequent physical flows, especially cash purchases or bulk sales, are most likely to trigger reporting and scrutiny. Smaller, gradual stacking behavior historically avoided thresholds, but higher spot prices shorten the path to reporting triggers. What to do now? If you buy or sell precious metals, treat reporting risk as real. Confirm dealer practices before transacting. Ask whether they file 1099B or 8300 and what documentation they will require. If you plan sizable sales, consult a tax professional experienced with precious metals. Proper documentation, basis records, and advance planning matter. For cash purchases near the $10,000 threshold, consider alternative, documented payment methods and be prepared for ID and source of fund requests. Track holding intentions. Long-term stacking versus active trading/sales have different tax and reporting profiles. Plan accordingly. Balanced perspective: this instructional revision is not necessarily a new statute or immediate seizure of private holdings. Bureaucracies update guidance periodically for housekeeping reasons. However, the confluence of rising physical demand, elevated prices, state-level tax changes, and a removal of clarifying examples increases enforcement risk and interpretive uncertainty now, exactly when private holdings are growing most rapidly. Key takeaways. The agency revised Form 1099B instructions on January 30, 2026, removing the precious metals example. That change is on the official site and broadens interpretive space. Existing triggers remain relevant: large silver bar sales, commonly 5,000 ounces for certain dealer reporting, and cash transactions over $10,000, Form 8300, still create reporting obligations. Precious metals remain taxed under collectible rules at historically higher rates. State rules may add cost or reporting. The practical risk is rising enforcement and dealer caution during a period of strong physical demand and higher prices. Do not assume prior informal exemptions or examples still insulate you. Verify, document, and consult a qualified tax advisor before large transactions. If you hold or plan to trade significant quantities of precious metals, prioritize documentation and professional tax advice. This is education, not tax counsel. Verify primary sources and confirm specifics with a licensed CPA or tax attorney before acting.